Hey everyone, welcome back to Corporate Decoder. Today, HIVE Digital Technologies has filed its annual report, the 10K, and I am seeing a massive shift in their business strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is leaning heavily into artificial intelligence infrastructure, and their financials from the last year show this dramatic pivot. This is HIVE Digital Technologies Limited, formerly known as HIVE Blockchain Technologies. The name change itself a few years back signaled this move away from just mining digital coins and leaning more into digital infrastructure. Their core business now is about leveraging their existing data centers, which are powered by renewable energy to support both digital currency mining and, crucially, high-performance computing, or HPC, and artificial intelligence, or AI services. They've got a dual strategy. Use the cash from their established mining business to fund growth in AI and HPC. Think of it this way, they have the power and the buildings, and now they're upgrading them to be super powerful computer hubs for AI companies. They are positioning themselves as a homegrown AI provider, especially in Canada, aiming to offer secure and reliable compute power. Looking at their operational setup, HIVE has a significant presence in Canada, Sweden, and Paraguay. As of the 30th of April 2026, they had installed hashrate capacity of about 25.2 ES, with an implied efficiency of 16.5 giant. This is important because efficiency in mining directly translates to profitability. A big part of their strategy and a major risk is energy. They have power contracts in regions with abundant renewable energy, which is crucial for keeping costs down. In Sweden, they have arrangements with Vattenfall AB, and in Paraguay, they're using Hydropower. Competition in both the crypto mining and the AI HPC space is fierce. They are up against established giants like Equinix and CoreWeave in the AI HPC market. Plus, other crypto miners are also pivoting to AI, creating even more competition for that valuable power and hardware. Now, let's talk about the big elephant in the room for any crypto-related company, the market itself. The filing mentions a significant drop in Bitcoin's price on the 10th of October, 2025. Bitcoin fell to about $104,582 from a high of $122,509 and an all-time peak of $126,198 just days before. They point out that this kind of volatility, amplified by leveraged positions, can really shake investor confidence and impact operations. They even compare it to the 1987 stock market crash, highlighting how intense these swings can be. This event serves as a stark reminder of the risks tied to their digital currency holdings and mining revenues. Let's dive into the numbers. As of the 31st of March 2026, HIVE had total assets of $639.1 million, up significantly from $531.6 million the previous year. This growth is largely driven by their property, plant, and equipment, which jumped from $202.8 million to $480.5 million. That huge increase in plant and equipment is where that AI infrastructure investment is showing up. However, their digital currency holdings have plummeted. They had $181.1 million in digital currencies on the 31st of March 2025, but that dropped to just $10.8 million by the 31st of March 2026. The filing explains this was largely because they used a lot of their Bitcoin to pay for equipment. This is a key point. They are actively trading their crypto for the hardware they need for their new AI business. On the liability side, accounts payable and accrued liabilities increased from $15.4 million to $27 million. This often means they are using more short-term credit to fund operations or purchases. This massive jump in property, plant, and equipment to $480.5 million is the core of their strategic shift. It includes major additions in Paraguay for data centers and land, plus an acquisition in Ontario, Canada. They are building out the physical infrastructure for AI. Their convertible loan, which was $1.9 million in 2025, is now fully paid off, which is good news for reducing debt. Let's look at the income statement for the year ended the 31st of March 2026. Their total revenue was $297.8 million, way up from $115.3 million the year before. Revenue from digital currency mining was $278.3 million, a huge jump from $105.2 million. They mined a lot more Bitcoin, and the price of Bitcoin was higher on average. But the real story is their high-performance computing, or HPC hosting revenue, that surged from $10 million in the prior year to $19.5 million. This segment is clearly growing fast and is a key part of their future. Despite the revenue growth, they reported a net loss of $148.4 million for the year ended the 31st of March 2026, a big jump from a net loss of $3 million the previous year. All that expansion and investment comes at a cost, and their increased spending on equipment like adding 18 ES in Paraguay really hit the bottom line. Their gross operating margin, which is revenue minus direct costs like electricity, improved significantly from 22 to 36%. This shows that even with higher energy costs for their expanded operations, they're becoming more efficient on a per dollar of revenue basis. And then there is adjusted EBITDA, a measure they use to see the operational cash flow before things like stock compensation and derivative changes. Adjusted EBITDA was $72.8 million for the year ended the 31st of March, 2026, a nice increase from $56.2 million in the prior year. This suggests their core operations are generating more cash, even with the overall net loss. The risk section is packed, as always. They highlight energy costs, power outages, equipment malfunctions, and cybersecurity threats. But the big one for their new focus is the competition for AI and HPC resources. Plus, they're really exposed to the volatility of Bitcoin prices, which directly impacts their mining revenue. For their HPC business, they're worried about finding good locations with power, dealing with strict regulations, and facing huge, well-funded competitors. They specifically call out that this new AI venture is capital intensive, and that financing is a major concern. Looking at what happened after the 31st of March 2026, they issued $115 million in exchangeable senior notes, meaning they took on more debt. They also purchased more property in Ontario, Canada. This shows they are continuing to invest and expand. So, what is the takeaway here? HIVE is making a huge bet on AI and HPC. They're trading in some of their Bitcoin for the powerful hardware needed to build out these data centers. While this pivot shows ambition and a clear strategy to tap into a massive growth market, it comes with significant financial risks. Their net loss has widened considerably due to these investments, and they are still very much dependent on the price of Bitcoin for their mining revenue, which funds a lot of this expansion. The biggest risk I'm watching is their ability to scale this AI business profitably while managing the inherent volatility of crypto and the intense competition in the HP space. Will they truly capture a piece of that booming AI market, or will the cost of entry and the risks associated with their mining business weigh them down? That is the critical question for HIVE going forward. If you found this breakdown helpful, please like this video and subscribe for more corporate deep dives. The research tools I use are linked in the description. That is my take. Stay decoded. Like this video and subscribe for more decoding of corporate filings.